I'm Brian Yampolsky.
And I'm Joe Ashton.
And we're the co-owners of Orion Mortgage, and this is the Inside Track.
And today's topic is about the most boring way to save $235 a month on your mortgage payment.
Wait a minute, why do you say boring?
Well, we're talking about mortgage insurance.
Oh, that is boring.
That is boring. So normally when people are buying a house, they're excited and there's a lot to do, and the last thing that they think about is mortgage insurance.
That's right, they're excited about the house, they're
Right.
excited about getting the right mortgage, they're focused on the interest rate, but as far as mortgage insurance is concerned, people just kind of take their lumps and go ahead and pay it.
Yeah.
Don't know that there's another way.
There is another way, and I think it's underutilized because most loan officers maybe aren't even aware of it. This product that we're going to tell you about today has not been around forever, and it's been kind of exclusive. It's really only been available to people with super high FICO scores, but that's eased up a bit. And so we're going to talk about something called a single premium mortgage insurance, where once you pay it, you're done, and you don't have to pay it anymore on a monthly basis.
Best way to show you what we're talking about is to give you an example. So let's just assume you've got a loan amount of $300,000 and you're paying 5% interest. That means your monthly mortgage payment is going to be about $1,610 a month. When you add on the monthly mortgage insurance payment of $235, that means your total monthly payment is about $1,845 a month. Now that's how most people do it. They I don't know, maybe 95% or more of the people end up paying that kind of mortgage insurance. But
how much mortgage insurance is that per year when you go $235 a month?
235 times 12 months is about $2,820.
Mm-hmm. Yeah, that's a lot.
So compare that to the single premium method, and this is what we're talking about today. If you pay the single premium method, essentially what you're doing is you're paying 2 years worth of your monthly mortgage insurance premium up front, and then that's it. You don't pay anything more than that upfront premium. So in this example of a loan amount of $300,000, your upfront premium costs about 1.95 points, or $5,850. Now, I don't care how you get that money. Either it's your savings, either you negotiate to have the seller pay it on your behalf. One way or another, it's to your benefit to pay that, because if you pay that up front, how long does it take for them to recoup?
A couple of years. You've recouped it all in a couple of years. And suddenly, the most boring topic in the world, mortgage insurance, is pretty exciting, because every year thereafter, you're saving $235 a month or $2,800 a year. 10 years, it's $28,000. I mean,
it's a lot of money.
It's a lot of money.
So let's sum this up. There are some benefits here that you just can't ignore. Number one, you're going to save $235 a month every month in our example. Number two, if you can negotiate to have the seller pay for it on your behalf, then it's like found money. Does that make sense?
Yeah. And then number three, pay attention.
You can qualify for more home.
Yeah.
Because if your borrowers have a lower monthly payment, then they can afford to buy a larger home. So today's topic of the most boring way to save $235 is just an example of how things are actually getting better in the mortgage business. There has been a loosening of credit, and I think we might have seen that coming, didn't we?
Well, yeah, we've been predicting it for a while, because we've had 3 or 4 years of tightening credit, tighter and tighter and tighter, and all of a sudden they are lowering the FICO requirements. You can get loans now with 600 FICO scores. They're also lowering the down payment.
That's right. You used to need 10% down in Arizona. Now
we need 5% down on a conventional mortgage.
Right.
And back then, in order to have a 10% down loan, you needed to have a 740 FICO score in order to get the mortgage insurance. Now they'll allow that with a 680 score.
So here's the thing. There are some good things happening. If you or you know someone who is buying a house in the near future, have them call us, because we can probably figure out a way for them to save some serious money. Either call the number on the screen, or you can email us at the email address on the screen. And as always, we want to thank you for watching, and thank you for your business.
What about the rest of the good news?
What's the good news?
I mean, your alma mater.
Bear down, baby. I think we beat the you-know-what out of Duke.
Wait.
Oh, Jesus.
Ryan had no idea he was here the whole time.
Yeah, sorry, we got to go.